Good afternoon, good morning, good evening, everyone. It is the 27th of January, 2021, 10:35 a.m. Eastern Standard Time. Continuing on with our discussions about the different instruments we've been discussing over the last couple of weeks in regards to them entering into zones that are well overdone and very much looking like they're going to create some type of corrective move. Not necessarily a broad trend change, but a strong corrective move here in the very near future. So the dollar index is certainly something that we've looked at, we've talked about, and we're not just going to talk only about the dollar index. But what's really interesting is actually, let me put that head and shoulders pattern back on there because we discussed this yesterday. I've put the hourly chart on here. I mean, we can see that all day yesterday. It's kind of like one of these little teases that the market will do to you, but you know, on the 26th, we had some nice rising appreciation on the dollar index. And then yesterday on the 27th, the 26th, we had really nice rise. And then we had it just kind of collapse when the London session hit, the dollar index dropped. And really, it went as far as the low of the neckline of this head and shoulders pattern. And if you remember watching my video from either Friday or Monday, I talked about how the head and shoulders pattern is extremely profitable. However, it's also one of the most rejected patterns that exists. And this is especially true in foreign currency markets. This is one of those patterns that everybody sees, and so professionals love to trade against it because they know it traps a lot of new traders, a lot of retail traders. Is that the case of what happened here? Maybe, maybe not. The structure still exists for this to travel lower to continue a head and shoulders pattern, but for now we're seeing a pretty strong bounce in the dollar index. This is the largest gain so far on the dollar index. It's up 0.64, and we have to go back to December 22nd to see it do that. Have this percentage gain. We haven't closed yet. However, this is really the kind of key thing there here that points to the idea that we're going to see higher prices in the dollar index. First is, let me get rid of that. Oops, that's not what I wanted to do. First, look at where the lagging span is. That's that black line over here, and that is currently above the candlesticks. That's important. Second, the current close is above the Tenkan-sen, the blue line, and the Kijun-sen, the red line. This is now what is called an open space, meaning that there is little stopping prices from moving higher. The only current resistance that exists that is nearby is the bottom of the cloud here at Senko Span A. And then ultimately, the strongest resistance we have on the daily chart up here is at 91.98. So we wicked right off the bottom of the cloud. That's pretty normal. But the next major resistance that we have up ahead is at 92.30-ish. And that is the likely area we should expect to see prices going. And so that's on the dollar index. We also looked at the dollar Swiss. Dollar Swiss, very similar conditions to the dollar index, which makes sense. Inverse head and shoulder pattern here for the dollar Swiss, and it's also had a pretty nice appreciative rise. Then let's take a look at two other pairs we looked at last week and this week: the Aussie dollar, US dollar, and the Kiwi dollar, the Kiwi US dollar. So Aussie dollar, US dollar, very flat baseline, natural strong support. But what we have currently is a bearish engulfing candlestick. And it looks like the volume is going to get higher here, and it looks pretty supportive to see some prices dropping lower. It is Fed day, so don't put a lot of stock into these moves until after the end of the day, after the Fed comes out and says what they're doing. And the United States Federal Reserve has the same goal as every other central bank right now, and that is a little game that the ECB, the Federal Reserve, and every other central bank on the planet, they all have this game called who can make their currency the most worthless the quickest. That is the goal. I don't expect to hear the Feds raise interest rates. Easing is continuing, but I tell you what, there is serious concerns across the board about inflation, and that should not be a surprise. That thing has always been in the rearview mirror, and unfortunately, it's just going to happen very fast. But right now, it's still in this bullish channel. The Aussie dollar is, but we are seeing some really heavy pressure on it. We go to the 4-hour chart in the Aussie dollar. We're just going to continue to see that pressure kind of build up, and the volumes really come in here on this 4 hours. Kiwi dollar, US dollar, same story. Very similar condition. Not as much of a bullish structure as we saw, but we have dipped below the Kijun Sen. And again, on the high time frames, we looked at this yesterday. I think I said the weekly chart yesterday. I meant the 3-week chart. The 3-week chart is very bearish looking. It's very elevated, and it looks very much like we're going to see a drop here in the near future. The major range, again, 69 even, very likely to see it go down there. And on the weekly chart, that 69 even really matches up well on the weekly chart with the baseline at 69 even on the weekly chart, and then you have single span B, top of the cloud on the 3-week chart. I think that's a natural area to go to. Very, very normal area, and I think we should anticipate that becoming a reality here over the next couple weeks. Thank you for watching. From all of us here at UK Exchange Rates UK TV, please don't forget to like and subscribe.